Welcome to the Market Edge Tech Talk with Will Pauly and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tuesday Tech Talk for June 12th. My name is Will Pauly and I'm here with my co-host David Blake, more commonly known as the Doc. David, say hi.
How you doing out there, Will?
Doing all right. Let's move on to the market. David, what can you tell us about the movement in the index ETFs, DIA, SPY, QQQ over the last week?
Yeah, rather than look at the actual indexes, let's go up to the stock section, and we're going to look at this week. We're going to look at the ETFs, and first one we're going to look at is the Diamond, which represents the Dow Jones. And let's go ahead and go over to the Technoscan report. Some of the viewers may not be familiar with this. Okay, the Technoscan report is a more in-depth report that we have on all the stocks and different indexes and ETFs. It kind of gives you a 3-page summary. We expand out the summary. We give you a couple charts that draws in some of the trend lines, that type of thing. As you can see over here, the summary on the Diamond is technical condition stock supportive of higher prices. And we've been saying we think we should have a breakout here to new highs for a couple weeks. Okay, the Diamond DIA stock remains in demand. Support levels should hold as the trend continues higher. Next paragraph basically is all of the different indicators we have. It's a little bit overbought, but they all seem to be bullish at this point. We do have support back here around 25,000 now. Actually, it says 24,671. And you can actually represent this thing as an index. But go ahead and go down the page a little bit. What we do is we take the different indicators that we look at in the second opinion report, and we let you know what's strong over the short and intermediate term. In this case, with the Dow Jones, everything is strong at this point over the short term and the intermediate term. We don't have anything that is weak as far as the different indicators come on. Now, to go down a little bit further, we give you a calendar of technical events. In this case, since mid-May, that's May 16, never mind. So for the last, say, 9 or 10 events that have happened with the Diamonds or the Dow Jones, they've all been bullish, except you can see the relative strength turned bearish. That's because the Diamond and the Dow Jones are underperforming the broader market, the S&P 500. Not by much, but they are. Okay, now if we go down one more page, what we do is we take put the little chart in here, give you some of the indicators, and we actually draw in some trend lines. In this case, you can see that we broke out of that descending trend line on the Diamonds here last week. And this week today we're a little bit higher, not much, but this will draw in different places of support and resistance that you may want to look at going forward.
Okay, excellent. Thank you, David. Now, I think next on our list here we've got SPY, so let's move over here to our Market Edge tab. We'll get rid of this one. We'll type up here. We've got SPY. All right, David, can you tell us what's going on here?
Hey, go to the Technoscan report. Okay, you can see we upgraded this a week or two ago. And again, for the summary for the SPY, the technical condition is strong. The chart pattern suggests that upward momentum should continue. You can see in the chart that we provide for you that we broke out of another downward trend line, and we're breaking out here, going up to the highs that we had here in March. We should be punching out new highs in this thing probably over the next week or two as the summer rally goes on. Go down a page to the indicators, and again, we don't have anything that's weak at all. For the short term, intermediate term, everything looks higher. Going down to the calendar of technical events, nothing but bullish signals going forward through here. So all that's good. Come down here, and you can see the trend line is drawn in that we broke out of here last, I believe it was last Monday or so. The different indicators below that, the MACD short term is bullish. The 9-day RSI is coming up here a little bit, getting close to being overbought, but it looks good. And again, we should see the S&P and the SPY break out the new highs shortly.
Looking good, looking good. Well, lots of things breaking out to new highs. What about QQQ? How have we been doing over here?
Okay, the Nasdaq has been breaking out to new highs already, and we actually are making a new high in that today. After the summit with North Korea, we didn't quite get the pop in the big board that we were expecting. I kind of thought we might get a little bit of a feel good rally, but they kind of took that in stride, and now they're looking at for the FOMC meeting tomorrow, where we're expected to get a rate hike. As far as QQQ goes, again, technical condition is strong. Underlying indicators should keep the current uptrend intact. You can see we've making a series of new highs in the Nasdaq, and also the Russell has been making new highs too. We made a new high in that today. Going down to the next page. Again, nothing weak in different indicators. Everything is bullish. If you go on down the technical events, we did have a price gap down that was taken away the next day.
May 15th.
No, that wasn't anything serious. I forget what happened, but I think the market rallied back by the end of the day to clear that. As you can see here, we're still making a series of new 52-week highs, and again, like we said, we're making another new high today. So is the Russell 2000.
All right, thank you very much, David. Well, now that we've got an idea of how the broader market's moving, let's discuss some industries. Is there any insight I can find using Market Edge?
Yeah, go ahead and get rid of this chart. And go to the top up there next to stocks. You'll see industries. Go ahead and click on that. Here the industries are alphabetized, but if you click on the last column where it says relative strength, do it one more time. We'll sort out the different industries by the how they're performing versus S&P 500. In this case, medical supplies, secondary oil stocks, advertising, coal, trucking, all three internet categories, software, services, retail are making highs. Now, if you put the mouse over, let's say, internet software, you get a chart of how that is versus the S&P 500. And if you click on that, it's going to give you a list of stocks that you can take a look at. Go ahead and put the page up a little bit. Okay, this will give you all the stocks that are in that industry group, what our opinion is, what the score is, and what's been upgraded here. As you see, that Zillow and I guess it's Cena or Sinacor has been upgraded to a neutral. If you go over to the symbol box on the left-hand side, you're able to see a chart of each one of these stocks, and as you see something that Twitter, for instance, is breaking out the new highs, got an upgrade today. You can see what looks like it has a lot of momentum behind it. You can find yourself a couple stocks in that industry group that you're probably going to keep on moving higher where you want to be.
Very interesting stuff, David. Thank you very much. Now, you've been working with our other content creators on these things called doc stocks. You know, we put out these 3 stocks every week. You write a report, and you do a little bit of a breakdown. And can you give us a little bit of a rundown of one of these stocks? I think one of them this past week was Apple.
Yeah, go back to the home page. Okay, Tom Ventresca and Rich Kubley write these up every week. They pick out a couple stocks that are in the news, and they just give a little bit of a fundamental description of what's going on, and they put up a second opinion. We'll tell you what our opinion is and whether or not we're going to agree with what the fundamental analysis is. You go on down here, we'll give a little bit. We'll put the chart up, let you see some of the pertinent indicators that they talk about on the chart, and finally they give you a quick summary of what they expect the chart to do forward. In this case, Market Edge has Apple rated a buy. Maxim Group had raised their price target to $200. And looking at our indicators on Apple, it looks like we pretty much agree with the fundamental concept of what Apple should do. And it looks like $200 is in the cards for Apple going forward. And we'll do 2 or 3 of those stocks. We do 3 stocks every week like that. And if you go over the doc stocks, they show you how they what they look at when they're analyzing a stock technically, what works for them. So let's see if our opinions change on Apple. Why don't you go back to the stock section and pull up Apple. See what we got going here. Okay, had a little bit down day yesterday. I think there were some concerns about the iPhone. But as you can see, the stock's still a buy. We're trading up here around 191. When we put that up, it hasn't moved since the last time we put it up, but Apple still looks higher. Everything, all the indicators are still bullish. It's not overbought at this rate, which is good considering what the Nasdaq's doing. It's outperforming the S&P 500 by about 8%. And the current comments are the condition for Apple is strong. The chart pattern suggests that upward momentum should continue.
Excellent. Well, it's come time to move on to our last segment. This week, we'll be discussing the market letter. David, can you give us some insight here into what's going on?
Yeah, go ahead back to the home page again. In the left-hand column, you'll see the market letter weekly. This week says major averages rally on easing trade tensions. We give a little bit of a summary at the beginning of the letter, and then if you scroll on down, we talk a little bit about the CTI, which is bullish. We're going to slip down to a plus 12 at the end of this week, but we're probably going to remain. We're projected to remain bullish into the summer, through the summer basically. So the summer rally that we're getting is we were looking for that. We've been talking about that for the last couple of weeks. If you go on down more to the page, we talk about the momentum. It's positive. Sentiment got a little bit negative. We're starting to get a little bit more bullishness coming up. People are starting to get too bullish a little bit. But then we also will talk about the counter of technical events that we had for the diamond down here. And also at the bottom of the letter, we're going to give you some numbers to watch. Support areas, resistance areas, what the 50 and 200-day moving average for the S&P and the Dow and the Nasdaq. And then here at the bottom, if you want to go over some of the indicators and components that we talk about in the market letter, you can come down at the bottom and see what's positive, what's negative, and what the current reading is, so you get a little bit of better feel of what's going on with the market.
All right. Well, I think that's all the time we have for today, David. Thank you very much for coming out. It's been an excellent time.
All right, Will, and we'll meet with you next week.
All right. From everyone here at Market Edge, you guys have a good week.